Hi, everyone. So I was just reminding Sebastian that the last time that I saw him was at a little coffee shop in San Francisco, like 4-ish years ago.
Yep.
And Klarna was notable and on the rise, but it wasn't the most valuable privately held fintech company in Europe. So congratulations.
Thank you.
$5.5 billion valuation.
Billion, yeah.
Okay, and you've raised 1.2 billion in funding-ish.
It sounds like you know better than I do.
I'm relying on Crunchbase. I think I saw that Snoop Dogg is on your cap table. Is that right?
That's right. Snoop Dogg is an investor in Klarna. We're very proud to have him.
So when we talked years ago, Klarna was, and maybe perhaps still is, known best for sort of facilitating easy credit, making it easier for people to buy what they want on their favorite e-commerce site. But I know that you've added a lot of products since then. So do you want to maybe get us up to speed on?
Sure. I think that there's a massive opportunity for consumers when they shop online today to have so many friction points. Like one of them might be the ability to get free credit without all the fees and things that people associate with credit cards. But there's also other things like where is my package? When will it arrive? How do I do return? So there are many more things that people like. Where's the best offers, the best discounts? There's a lot of things that people still struggle with. And so what we're just trying to do is create that super smooth shopping experience. And the more problems we solve for these customers, the better and the happier they are and the more they're going to use it.
Oh, that's interesting. And so, and do you have any other sort of financial products like loans?
Yeah, I mean, we do direct type of payments like that. And then in some countries here in Europe, we've already launched a plastic card as well. So you can use this like that. And then we also do this kind of mint.com, as people still think about it as mint.com. It was a lot of years ago. But like this financial dashboard that shows you kind of your spending habits and all that kind of stuff as well.
Okay, that's great. I didn't realize that. So you've got a lot going on.
Yes.
And I guess toward that end, you were telling me that you have a thing to sort of tell the crowd today that I think they're going to be very interested in, and a new tech hub in Berlin.
Yeah, exactly. So I was just there in this office in mid-Berlin today. It was supposed to open on Monday. I think it's going to be a little bit delayed, but we've just created this new amazing office here in Berlin, and we're going to continue hire a lot of people in Berlin, but not like product engineering and kind of continue. So we've had already amazing success at building great products here, and we want to continue doing that going forward.
That's terrific. And so as of right now, that you've got around about 2,500 employees?
Almost 3,000, yeah.
Okay, and 17 countries.
Yep.
Okay. And you are in Germany, just not, this is like the big...
Yeah, I mean, in Germany is our actually largest market.
Okay.
So in Germany, we have about 30 million users, which takes us about 10 million ahead of that American wallet thing, which is quite cool. So Germany is super important for us. But right now, what's exciting is the US. So right now, we're adding customers at a pace that will be about 6 million customers on an annual basis in the US right now.
Okay.
So US is really taking off, and that's also super exciting to see.
Great, great. And I'd read that you want to make a big push, and we were just saying that you're spending much more time there than you had in the past. Now, but the sort of instant credit product is still the biggest sort of producer of revenue, I would gather.
Yeah, I mean, I think the thing is that like, if you look at, there's two things going on here, right? First is that millennials in the US and UK, they don't have credit cards, they have debit cards. 70% of millennials in the US only have debit cards.
Okay.
But they're still looking sometimes to get a cash flow ease. What's good about our services is it doesn't cost the consumer anything. So it's not like the old credit cards, which was really expensive for the users.
Right.
So it's merchant funded, and that allows the consumers to then sometimes be able to ease their cash flow, pay in 4 installments or try before they buy and stuff like that. So people forget is that people who have debit cards have much harder issues shopping online than people with credit cards, and that's a big piece of what we're solving for.
Right, and much more sort of visibility into what they're going to be paying at the end of the day.
Transparency, clarity.
Right.
Totally right.
So just in terms of how it works, so do you always break the payments into 4 payments?
Yep, so we actually, the breaking 4 is great, but that's one option. What we've seen is that consumers have different needs, right? So some people really like our try before you buy product, which means you pay nothing at the time you buy, and then everything 30 days later when you receive the products. Okay. Some people really like to kind of split it on installments. So maybe like you take $100 and you split it 25, 25, 25. And then sometimes if it's really bigger purchases, like you're buying a sofa or something else, you might split it over like 24 months of financing or something like that, which is kind of different. So we just want to make sure that customers have, and sometimes you just want to pay everything instantly, right? So we just want to make sure that people have like all the options that they want to from Klarna.
And how much can they spend? What's the sort of the upper boundary of what you can buy?
I'm sure there is one, but it's really hard to answer because it's very individual on an individual basis.
Okay.
Yeah.
And then I'm just trying to understand this. So you're buying the receivables from merchants at a discount? Is that how it works?
Sorry?
Are you buying the receivables from the merchants yourself, or?
Yeah. So basically, the merchant sets up with us. They pay us a merchant fee, just like they do with PayPal or somebody else.
Okay.
And then we process the payments for them, and we take the full risk and all the, customer care errands, everything related to the transactions. Yeah.
Okay. And then you've raised a lot of money, but I'm assuming that's not the money that you're using to do this. So, and you have a bank charter in Sweden.
So we're a fully licensed bank, and we have deposits to fund the balance sheet.
Okay.
So yeah.
Okay.
So people in Germany can actually save with Klarna and get 1%, which doesn't sound a lot, but it's massively more than they get with any of the traditional banks in Germany. So
yeah, no, that's terrific. Okay, so I did want to ask about interest fees, late fees. How does that work?
sure. So basically, we keep them extremely low. There are sometimes, if you're late, there might be a late fee, but the whole purpose here is that it's merchant funded. So merchant pay for this, and the consumers get a much better product than the traditional credit card or other options like that.
Okay, and what is the default rate?
Super low. If you look at like the overall Klarna for all markets, it's less than 1%.
Okay, that's great. I also wanted to ask, it sounds like this is not going to be the case, but in terms of late fees, there was a competitor of yours, publicly traded Afterpay, that last year was criticized because I think something like a quarter of its revenue was coming from late payments. Can you say, I guess, what your revenue streams are?
Sure. I mean, most of it is coming from merchant fees, and late fees in general are never bigger than the losses that you're making. So, but I think it's definitely an important topic where all the companies in this industry need to be very careful about how you set up your products and so forth. I think Klarna, maybe because we've been around longer than the competitor you're referring to, and because we're 5 times their size in totality, I think maybe we have just come a little bit further in how we think about consumer value and making sure that fees are right and so forth.
Okay.
So those are important topics to keep an eye on. But I also think that what's even more important is that you have this credit card industry, which in general has charged massive interest rates, a lot of late fees, and been not a very transparent and great industry.
Sure.
And I think actually the big opportunity is for people like us and the one you referred to and others to disrupt that industry. It's the credit card industry that we're going after.
Sure, and I'm not going to defend the credit card industry at all. But so, I'm sorry, did you say what your interest fees were?
Sorry?
Did you say what kind of range the interest fees
Well, that
are?
depends on a per individual basis, but like it's definitely lower than the average credit card fees.
Okay, and then your merchant fees are higher, but that's because they want to pay you more than credit card companies because you're basically increasing the purchasing power of the people that you're...
And actually, that's, if you look to some markets like Brazil and Turkey, that's kind of how the whole world works.
Oh, is that right?
Yeah, so I think in a way that's where kind of the direction we're heading in. Because as a merchant, you also have more buying power than as a single individual consumer. So you'll be able to negotiate better rates and be able to offer these products as a better rate than as a single individual.
Right, got it. Okay, so you obviously have heard sort of concerns, I guess especially as we're maybe heading into a recession, that easy credit may be dangerous for consumers. You've got this technology that can assess whether or not somebody's sort of a good credit risk. And this is not a fraudulent transaction, but you're not really getting a picture of their other financial obligations. Is that accurate?
In what sense, sorry?
I mean, like you don't know what other sort of burdens they have, they might be dealing with. I'm just saying.
No, we do thorough credit checks, and it depends because in each market, it's hard to answer these questions when you're active in 17 markets because they're all different and so forth. But like, it's a definite obvious for us that we need to be able to assess the credit. People's ability to pay as well as their intent to pay. So that's super important. Again, the benefit we have, we do about 1 million transactions daily. We've been doing this for 15 years. So we really learned how to identify that and do it in a thoughtful and in a good way for the consumer. So, yeah.
And so, I mean, obviously there is a lot of demand for this kind of product. I mean, I've been astonished to see how these other sort of competitors that have sprung up in more recent years, in
Yep.
addition to Afterpay, there's Affirm, there's Sezzle.
Yeah.
Why hasn't there been more consolidation in this space? Is it just too soon?
Yeah, I don't know. I think there might become eventually, but I do think again that like there's a lot of focus on these companies right now, and it's fun since Klarna I think was the original and the first one in this space. But the point is that like what we're trying to do, all of us, all these companies together, is really going after that credit card industry that is $1 trillion industry or whatever it is, and that hasn't served its customers well, that hasn't, has been all about hiding fees and very intransparent products and services of fairly poor quality. So I think the reason you're seeing a lot now is because that disruption is really happening now.
Right.
There's a big opportunity to change how this whole, and that's to some degree also true for N26 and Monzo and all the banking disruptors as well. Like we're all going after these big banks
Right.
who haven't really served their customers well.
Well, what's interesting to me is a lot of them are taking stakes in companies like yours. Like Visa made a strategic investment in you in 2017.
Yeah.
But I just wonder, I guess, why they aren't pulling the trigger. If it's a matter of them not knowing how to like integrate these into their legacy systems, but wanting to keep tabs on things, or maybe you have been approached.
Yeah, I think that I think what happens right now, I mean, it's a little bit like self-driving cars, right? So 2 years ago, everyone was talking about it. I still didn't go here in a self-driving car, right? So there's going to be a hype. Now, what I genuinely think, however, is I think that I've been doing this now for 15 years, which is kind of crazy. I was 23 when we started. But the point is that like, when I'm looking into it right now, the bank disruption is actually happening now. And I'm one of the people who would never say that. I'm always like, oh, it's just a trend, it's a hype, it's going to pass, it's going to take longer than people expect. But I see it happening now. It's really happening. Consumers are switching en masse to these new services. And so what the legacy incumbents then do is you can go back into history and see it's always been the same thing. They are left with 3 options. Transform themselves, which demands a very courageous CEO to really change a business like that, and a very tough thing to do. Secondly, M&A, and third, go away and die as a company, right? And so I do think that that's what you're going to see in the market. Now, I wouldn't put necessarily Visa there because I think that Visa is not a traditional bank. They're something else. They're a tech company. But in general, if you look at the whole industry, you're going to see a lot of investments in M&A activity going on because that's just how you defend yourself as an incumbent versus disruption.
Right. So I did ask, but I sort of folded it into my last question. Have you been approached?
I mean, we get approached all the time, but yeah.
Well, so I guess in addition to Visa, I thought it was sort of interesting that you announced, I guess maybe it was in October, that AWS is now your preferred cloud provider. I'm imagining that Amazon is sort of an interesting and important partner for you.
Yes.
Why? That was brief. I'm wondering that in part because, like Amazon and Google are now embedding their payment systems into their platforms, which I would think is a risk to your business and those of your rivals. I guess, how do you...
I do think so, but I'm also one of the people who believe that like sticking to core is so important. And so like what's happening now is we've seen a lot of like the big tech giants trying to kind of do more and more things. And I just think that's very hard to do over time. And the other thing is that like, so the only thing we can do as Klarna is to try to consistently stay ahead, right? And I think it's like when we started 15 years ago, it was payments online was everything about safety. That was the only thing people mattered, like safety. Right. Because people felt unsafe shopping online even at those days, right? I think 2010 to 2020 has been everything about simplicity. One click, because Amazon really taught us that one click was important and everyone wants to do one click. The question is, what is 2020 to 2030, right? That's what we've been thinking about. Like, how do we stay ahead of the game? How do we innovate? How do we keep creating new services and improvements to consumers so that they feel that like this is better than what's out there right now? And so, in my opinion, that really demands you to be passionate and in love with your business. And I think it's hard for tech giants to be that at that scale. Like, it's easy to recognize what's going on right now and what should we be doing. It's much harder to guess what's going to happen 5 years from now.
Right.
That really demands that passion and closeness to what you're doing.
Okay, well, talking about the future, a little bit of a leap here, but I saw that you talked to the Financial Times this summer. They asked you about going public after all these years. As you said, you've been doing this since you were 23. You told the outlet that, quote, in many ways, we have most of the things in place that we need. It's more a question of timing and focus. So how's 2020 looking in terms of timing?
Yeah, I don't know. Maybe it could happen. It's, but it was kind of funny because I was reading an interview with Michael Moritz, who's on our board, and he was saying that we were going to stay private forever. So I don't know. It's hard for me to know now what's true anymore. People are reporting different things about Klarna. So.
Right. You never know what Michael Morris is going to say.
Exactly.
But if you were to go public, theoretically, I assume it would be a U.S. listing?
I would assume so too, yeah.
I also just wonder, what do you think of this whole direct listing?
Sorry?
I wonder what you make of direct listings. Your neighbor, Spotify, led the charge.
Oh, I think it's wise. I mean, Michael is a big proponent of it. I think it makes sense. I read all the arguments. That looks interesting.
It is interesting, and also I think probably, do people in Europe, are they following this conversation? It's basically where you take a company public and the shares are made immediately tradable by existing shareholders, but you're not raising money. So I guess that sort of begs the question about your sort of financial picture. Would you be raising funding again? You raised a big round this summer.
We are in a very exciting phase right now where US and UK is growing so fast for us. I mean, in the UK, we're hitting 5 million users now, and the rate in the US is super high for growth. And we want to continue investing. We think that, the potential market in the US is just massive, right? So that's really fun because we've been thinking and wanting to get into the US for a very long period of time. And it's fun to actually see it happening. So we will see what happens, but I wouldn't rule it out that one thing that could happen is raise even more money to be, investing even more in growth and product delivery and new products and services, as well as sales and marketing in the US.
Right. Of course, every time you raise money, it sort of impacts whether or not you're profitable. Are you profitable now? Have you been at any point?
Yeah, so Klarna has been profitable every year up until this year.
Okay.
So
that giant round sort of threw you off?
Yeah, exactly. So, and that's basically because of the investments in the US and UK and everything that we're doing now.
So we only have a couple more minutes, but I would love to talk to you about what's happening in 2020. So you have this bank charter in Sweden. I'm wondering, are you going to apply for a bank charter in the US? Is that part of this?
I wouldn't rule it out. I think that, again, we like being regulated. We think it's smart because right now what you have is you have banks who are fairly, in general, slow moving, but has still to some degree more trust. Not all of them, but some of them more trust because they're clearly following regulations and living up to these and so forth. Then you have fintechs who are moving much faster, but I do think some of them taking maybe too many shortcuts, right? And so what we want to try to do is be in the middle and say, let's be regulated, let's follow those standards, but a lot of the regulations are actually quite good. If you kind of read and understand the original intent of why you were supposed to follow these policies or regulations and so forth, it's really good. What most banks fail with is how they implement them. So they implement them in a very bureaucratic, very hard, very administrative way, and the consequence of that is actually creates more risk than less. And then you see things like some Swedish banks have seen blown up in the Baltics with Know Your Customer AML and other areas that you've had. So it's not about the rules in themselves, it's about how you implement them and doing that well, right? But for us, we think that the value is being both a bank and a fintech, being both, because there is reason why these regulations were written. And I think I do think that to answer the question for the US, that's why I'm not ruling out becoming a bank there as well, because it has, in my opinion, there's advantages to it.
Sure.
It's a little bit more work, but the value of the company is the amount of work and creativity that we put in and the problems we solve, right? That was what Martin, the founder of Spotify, said very wisely. The value of the company is the sum of all the problems you solve for your customers. And I think that's and this is also one of the problems that you need to solve for. How do you make sure to follow these regulatory requirements?
Right. And in the meantime, you're using a bank.
Bank partner in the US, so
right.
We're working with them in the meantime, yeah.
Okay, great. And I guess last question, I talk to fintech entrepreneurs every once in a while. Robinhood has been very clear about wanting to become like a full-service financial institution. Is that how you want people to think about Klarna in the US?
Yeah, I think so, but just one comment on that. Look, I think at Klarna, people ask us, are you going to be a full-blown bank? Define what you mean with a bank. I think what's much more important than the industry label of saying you're this or that is like, for example, a team internally at Klarna came up with the idea that a lot of people using Klarna wants to see where are my packages, when is my package going to arrive, because they shop something online and they wonder when is delivery going to happen, what is going to happen, and they shop on multiple websites, so they want it all in one place.
Right.
And so we said, let's build it. Let's solve that problem. It makes sense for Klarna to solve that problem for consumers. Now the question is, would a regular bank do that? They would say, no, that's not banking activities, right? So I think you should not be driven by the label of are you a bank or not a bank, or is this bank, whatever. We're driven by the problems we can solve for our consumers, and then we need to ask ourselves, are we well positioned, and do we have the right abilities to be able to solve them in a good way for our customers? Right. That's what's driving our decisions of what we do and don't do, rather than is it a label like full service bank, non-full service bank. Like, I don't care as much. I care about the problems that we solve for our customers. Great.
Well, it's such a pleasure talking to you. I wish we had more time.
Thank you so much.
Thank you, Sebastian.
Thank you.